Hi students, welcome to the video on double entry system of bookkeeping. The topic is learn bank reconciliation statement in 2 hours. So what are the glimpse of the topic? First we will discuss the meaning, definition, needs, importance, specimen of cash book and passbook, the reasons for difference between cash book balance and passbook balance, then specimen of bank reconciliation statement, then its alternative presentation of bank reconciliation statement, preparation of bank reconciliation statement, steps involved in comparing bank column of cash book with passbook, above all, preparation of bank reconciliation statement on a given date when balance as per passbook is given or balance as per cash book given or overdraft as per cash book given and overdraft as per passbook given. So we have to reconcile with the, if it is balance as per passbook given, we have to reconcile with cash book, bank column of cash book. If cash book is given, we have to reconcile with the balance as per passbook, and this is the case in case of overdraft. So when we start with cash book balance, both favorable and unfavorable, we have to arrive at passbook balance. So on bank reconciliation statement, the customer prepares cash book and bank prepares passbook on behalf of the customer. If transactions are recorded both in the bank column of the cash book and in the passbook, the two balance will tally, that is reconciled. So reconciliation is not necessary, it is already reconciled. But it is sometimes seen that some transactions are recorded in the cash book but not in the passbook, and vice versa is the case. In order to reconcile the bank column of cash book with passbook, a statement is prepared. Such a statement is known as bank reconciliation statement. So a businessman maintains a cash book with bank column in his ledger, whereas he records all business transactions. The bank column in his cash book represents bank current account. All of you know current account is open for businessmen on which they will not get any interest. So the bank column in his cash book represents bank current account. Bank being the other party, he records these transactions in their ledger known as passbook. But in practice, cash book balance is sometimes different from the passbook balance, and vice versa is the case. So bank statement is compared with the cash book for analyzing the causes of difference in the balance of the two books, thus a statement, and which reconciles the bank balance as per cash book and the balance as per passbook, showing all causes of difference between the two is called bank reconciliation statement. It is prepared at the end of the specified period or month. So we will discuss what is the need or importance of bank reconciliation statement. It ensures accuracy of financial records. Reconciliation ensures that company's recorded cash balance reflects the true amount of cash available in the business. Then identifying error. It helps identifying errors such as any incorrect entry detected, double payment, missing payment made either by the bank or by the customer or company. That is detection of errors and the omission made in either passbook or in the cash book. Then thirdly, detect and prevent frauds or unauthorized transactions. Reconciliation reveals unauthorized withdrawal or deposit if any potentially indicating fraudulent activity. It serves as an internal control mechanism to mitigate the risk of financial misstatement or misappropriation of assets. Then tracks outstanding checks and deposits in transit. These timing differences are natural in accounting but must be tracked to avoid misinterpretation of cash flow and available funds. Then fifth, identify bank fees, interest income or direct debits. Bank imposes fees and direct debits for recurring payments may not immediately be recorded in the books. So reconciliation ensures these are captured in the internal records. What are the steps in the bank reconciliation statement? So first, compare opening balances. The reconciliation process begins by comparing cash account to the opening balance listed on the bank statement. These should match if the prior period's reconciliation was completed correctly. A mismatch at this stage, that is initial stage or opening balance stage, may indicate unresolved issue from previous period must be investigated before proceeding reconciliation. Second, tick matching transactions. So you are having two books. One is bank column of the cash book, another is passbook. That specimen I will show you now. This is suppose bank column and cash book. Suppose this is cash book of suppose Messrs. Gupta as on suppose a particular date 31st March 2024. So this is left hand side is debit side DR and credit side, then date, particulars, ledger folio, then cash balance, then bank. This comes suppose a double column I will prepare. Then here also date, particulars, ledger folio, cash and bank. So here this is receipt of cash, this is payment of cash. It is nothing with reconciliation. We will only compare this bank column. That means cash deposited at bank or check deposited. Cash deposited or check deposited. When we deposit cash or check in the bank, bank will enter on the credit side of our passbook. So we will prepare the specimen of passbook. This we can write like this, specimen of passbook. So formats of passbook I will prepare. Formats of passbook. Here bank will write date, particulars, check number, then amount withdrawn, that is debit, and amount deposited, then balance, then balance, then signature or initial of the official of bank, signature or initial of official of the bank. Previously manually it was done, it had been done in the bank manually. Now it is systematized by online, that is by it is done by the computer. So manually nothing is essential. Here you see. So we have to steps in the bank account statement. First we have to compare the opening balance. Suppose opening balance is on suppose 1st April. Suppose we will start with 1st April 2024 or 25, whatever that. Suppose it is 1st April 25. This is opening balance. So write to balance brought down. Definitely, suppose the bank account cash book shows suppose 1 lakh. Here also the balance will show in the bank on 1st April 2025. The credit balance is 1 lakh. Then it is tallied. On the opening date it is tallied. Because bank column of cash book shows 1 lakh, whereas passbook shows credit balance of 1 lakh deposited by the customer or company. So reconciliation process begins by comparing the opening balance of the company's cash account to the opening balance listed on the bank statement. This should match if the prior period reconciliation was compared completely or completely corrected. A mismatch at this stage may indicate unresolved issues from previous period must be investigated before proceeding reconciliation. Second, tick matching transaction. Go through each transaction recorded in the cash book and tick mark these that appear in the bank statement. Suppose we deposited cash in the bank. To check deposited, suppose we deposited 50,000. Then on suppose 2nd April we deposited 50,000. That 50,000 suppose it is reflected in the bank passbook by cash deposit. The credit balance, that is 50,000. Then definitely balance increased to 1,50,000. Here also the balance is 1 lakh plus 50,000. That means it is tallied. We will tick this. That means it is entered. The transaction is entered both in the bank column of the cash book and in the credit side of amount deposited column of the passbook. If all the transactions recorded like this, you have to tick those transactions which are recorded in the cash book, not in the passbook, that is to be taken care, and some transactions recorded in passbook, not in the cash book, that is also to be taken care. Then by adding and subtracting, we will arrive the balance of other book. Go through each transaction recorded in the cash book ledger and tick mark those that appear in the bank statement. This indicates deposits, overdraft, transfers and direct debits. This step identifies transactions that have cleared the bank and distinguishes them from that are still pending or missing. So matching transaction confirm that they have been recorded correctly on both sides. Then third, identifying and list discrepancies. After matching the transaction, you likely encounter discrepancies. That means outstanding check, that is check issued but not yet cleared by the bank. While issuing the check, if the customer writes by check, suppose the amount he has written 20,000. So it must be entered on the debit side here to check number so and so. Then amount is suppose 20,000. So balance will be reduced to 1,30,000. When balance here also 1,50,000 minus 20, 1,30,000. So two book will tally. But suppose it is entered in the bank column of the cash book and it is not entered in the passbook. So the passbook balance shows more for 20,000. Outstanding check, that is issued but not yet cleared by the bank. Deposits in transit, recorded in the cash book but not yet credited by the bank. Then bank errors. Then adjust the cash book. update the company's internal record to reflect any transactions found on the bank statement but not yet recorded in the cash book. This may include bank charges or service charges, direct deposits or direct debit by the customer in the bank. Sometimes customer will directly deposit the amount in the bank. As a result, the passive balance will increase. Cash balance will not in cash balance is less, and the customer will record it when customer is aware of it. Similarly, bank charges for service or service charges, customer as a result the passive balance will reduce and cash balance is more, and customer will know. When the customer will know it, he will rectify it in his cash book. Interest income, check return or bounced. This statement helps verifying that after adjustment, both records match or explain the reason for any differences. Then review and sign off. Finally, the complete reconciliation should be reviewed and signed off by an authorized person such as supervisor, accountant or auditor. This step ensures accountability and is a key part of internal control. Proper documentation and approval provide an audit transaction and confirm the integrity of financial reporting. What are the common causes of discrepancy in bank reconciliation statement? Understanding these causes is very crucial for effective reconciling and accurate financial reporting. First is outstanding checks. Some checks may be deposited in the bank but not credited in the passbook. Sometimes some checks are issued to the customer and it is debited or it is deducted from the bank account of the cash book, whereas those have not been entered in the passbook. So deposits in transit refers to funds received or recorded by the company but not yet processed or reflected in the bank statement. Bank fees or interest not recorded in the cash book. Direct debits or credits not yet entered in the cash book. Errors in the bank statement or company ledger. Sure. What are the causes of difference in cash book and passbook? So, we will discuss the causes of difference. Causes of difference. One is due to time. Due to time. One. Due to time. And second, due to error and omission made by either by bank or customer. Due to errors or omissions done by either bank or customer. What is time difference? Time difference means there is a time gap. There is a time gap between deposit of check in the bank and the collection of checks and credited in the account of the customer. Similarly, check issued at the time of issuing check, immediately the customer will record in his bank account of the cash book on the credit side that it has issued that much check. Unless and until the customer approaches the bank or reaches the bank for withdrawal, then check will not be, the deposit withdrawal will not be reflected there. As a result, the passive balance shows more, cash balance shows less. Similarly, check issued but not at present, check deposit not collected. Sometimes the customer deposit check in the bank and bank takes time in collection, or if we prepare the reconcile both the books on a particular date, on that day the cash balance shows more, passive balance shows less. Then transactions that appear in the passbook but not in the cash book. Suppose interest credited at bank. As a result, the passive balance will show more, cash balance will say show less. Direct collection of income on behalf of customer. Sometimes the customer has given the assignment to the bank and to collect some checks on behalf of him, or to collect some, suppose the customer is having given a rental basis so many premises, then bank can collect the rent on behalf of the customer. If the customer has given him the instructions, and as a result, the bank will also get service charges. In that case, when direct income collected by the bank, then the passbook will show more, cash book will show less. Direct payment of X. Sometimes, suppose the customer has given to make payment for any LIC policy premium or any health insurance premium or whatever the bank has given, the bank has been assigned to remit the funds to various parties as per the advice or instruction of the customer, then the bank or passbook balance will be reduced and cash balance will be high on that date. Then bank charges, interest on bank overdraft, commission charged by the bank. As a result, the passbook balance will be reduced and cash balance is more. So you have to add with the cash balance to tally with the we have to deduct from the cash balance to tally it with the passbook balance. If passbook is the base, we have to add this to tally with the cash book balance. Dishonored check and bills of exchange. When the check or bills of exchange dishonored, bank immediately deducted from each passbook from the customer account. Then the passbook balance will be shown less and cash book is more, and the customer will be rectified only when he is aware of the bounce of check or dishonored check. Amount directly deposited in bank. Sometimes some customer deposit directly into the bank. As a result, the passbook balance shows more, cash book balance shows less. Then second reason is due to errors or omission either by bank or by customer. Recording on wrong side, recording wrong amount, recording balancing totaling wrongly, double recording, omission to record a transaction. These are all the various errors and omission made either by the bank or by the customer. So, bank statement can be viewed online. Nowadays, previously time was there that was manual, it was very difficult to reconcile the two balances. Nowadays, bank statement can be viewed online. Bank statement is a summary and financial transaction which have taken place over a given period on a bank account held by account holder. Previously, earlier bank statement were printed paper statement produced monthly, quarterly, annually. Bank as a matter of service would provide a periodical bank statement. Today, with better access to the internet and online banking, bank statement, also known as electronic statement, can be viewed online, downloaded and printed by the account holder. This reduces the cost of paperwork and postage. As a result, the reconciliation of bank column of the cash book with the passbook is easier. Then we will discuss the reasons for discrepancies. Then what are the reasons for discrepancies and how it will be rectified or reconciled. So we'll make a column and accordingly we'll have a discussion. See, we will make 5 columns. One is reasons for discrepancies, reasons for discrepancies. Then we will start with when bank balance is given. When bank balance as per cash book is given. Bank balance as per cash book is given. Another passbook balance. Bank balance is given as per passbook. Bank balance as per passbook. Here cash book, then second is passbook. Then overdraft as per cash book. When overdraft as per cash book. Then fourth, overdraft as per passbook. So, 4 ways we will discuss. First, check deposited bank but not credited. First reason is check, it is due to time difference. Check deposited into bank but not credited. You see here, when check is deposited bank, this cash balance shows more because immediately it will be recorded in the bank column of the cash book of the customer. As a result, the cash balance shows more. If we have to reconcile the cash book with the passbook, cash balance, because it is not entered in the passbook, so we have to subtract this amount in order to reconcile with passbook. Suppose passbook balance is given, we base is passbook balance, then passbook balance shows more, so we have to add it to tally it with the cash book balance. Then overdraft of cash book is given, means overdraft means minus, so what is plus? In case of overdraft, in balance it is plus, in the overdraft it is minus. Then here it is plus. Overdraft as per cash given, we have to plus, check deposited but not yet credited. If overdraft as per passbook balance given, we have to minus. Then check issued but not yet presented for payment. Check issued but not yet presented for payment. See, when check is issued, directly it is entered on the credit side of bank column of the cash book. As a result, the cash balance will be decreased. But the customer is not presenting the check at the bank, then cash balance shows more. So we have to add this amount in order to reconcile the cash balance with passbook balance. If our cash book is the base, if we take the passbook as the base, we have to deduct this. Then if it is overdraft, in balance it is plus, in case of overdraft, cash book it is minus. Here in case of passbook it is minus, in case of overdraft it is plus. Then third, bank charges debited in passbook. Bank charges debited in passbook. When bank has charged, it will debit the amount from passbook. As a result, passbook balance will be decreased. Cash book balance is more, so we have to subtract this amount. If the base is passbook and is not entered in the cash book, we have to plus it. So minus plus. Here it is cash book, it is plus, overdraft as per cash book, we have to make it minus, overdraft as per passbook it is plus, overdraft is minus. Then interest credited by bank. Interest credited by the bank. When bank credit the interest, the passbook balance will be increased and passbook balance is low. Means the customer will record it when he will have that interest has been credited by the bank. So when passbook balance is more, we have to add this amount to tally the cash book balance with passbook balance. If passbook is the base, we have to subtract this amount to get the cash book balance. If it is case of overdraft, we have to subtract it. Overdraft as per cash book. If it is overdraft passbook, we have to plus it. Then interest debited in passbook. This is interest on overdraft or interest charged. Interest debited. Interest debited or charged. Debited or charged. When a banker has charged the interest or debited the account, the passbook balance shows more less. Cash book balance is more, so you have to deduct it. If passbook is the base, we have to plus it. Then if it is overdraft, we have to plus it. If it is overdraft for passbook, we have to minus it. Then BI. Payment made by bank recorded in the passbook only. Payment made by bank. Recorded in passbook only. Sometimes bank makes payment or customer payment. As per the instruction, sometimes banks made payment on behalf of the customer. As a result, the passbook balance will be reduced and cash flow the balance is more. So we have to subtract the amount to tally with the passbook balance. If the passbook is the base, we have to plus it. Then in case of overdraft cash flow we have to add it. In case of overdraft passbook, we have to subtract it. Then 7. Direct payment by customer in bank. 7. Direct payment by customer into bank. Deposit. Payment means deposit. By customer into the account of the customer in bank. Direct payment by customer in bank recorded in the passbook. As a result, the passbook balance goes more. So we have to plus it. If passbook is the base, we have to subtract it to tally the cash flow balance. If it is overdraft as for cash flow, we have to subtract. If it is overdraft passbook, we have to add. Then check deposited, bills receivable discounted the bank dishonored. Bills receivable discounted with bank. Bills receivable discounted with bank. Discounted with bank. Dishonored. You already know in your bills of exchange chapter when bill is discounted in the bank on the due date, that is legal due date, customer unable to or express inability to not the payment of the bill, that is the case of dishonored. When there are dishonored, a bank will debit the customer account, means customer account will be reduced. When customer account will reduce, if we will take the cash flow balance at the base, we will subtract this amount in order to tally it with our passbook balance. If passbook is base, we have to add it with the passbook balance in order to get it the cash flow balance. If it is overdraft as for cash flow, we have to plus it. If it is overdraft for passbook, we have to subtract it. Check deposit in the bank being dishonored but not recorded in cash book. Same thing. Bills received discounted with the bank or check dishonored. Same thing. IX. Check dishonored not entered in the cash book. Not entered in cash book. Here in this case, when the customer deposit check in the bank, if the check is dishonored, then at the time of depositing, he will show increase in the cash book balance, bank account cash book plus. But in case of dishonored, it will be deducted from the passbook balance also. So cash book we have to subtract it. If balance as for cash, we have to tally the passbook. If we will take the base as passbook, we have to plus it. Then if it is in case of overdraft cash book, we have to plus it. If the base is overdraft for passbook, we have to subtract it. Then these are the 9, and there are so many instances. Sometimes there is undercasting or overcasting I will discuss. Suppose there is undercasting and at the time of balancing of the bank column of the cash book, it is undercasting total. Debit side total shows less. As a result, cash book balance reduced. Cash book balance shows more. So we have to add it. If it is overcasting, at the time of totaling, the debit side is more. As a result, cash book balance is inflated, shows more than the actual. It is to be deducted to tally it with the passbook. Suppose the credit side of bank column is undercast, means the payment is shown less. As a result, cash book balance shows more. So we have to deduct it. If we take the base as cash book, we have to add it if we take the base as passbook. Then credit side or payment side is overcasted, means payment shows more. As a result, cash book balance shows less. So it is added if cash book balance the base. If passbook balance is base, it will be subtracted. And sometimes twice wrongly it is debited or wrongly credited either by the customer or the bank. Depending on the situation, we have to reconcile by means of add and less. We have to reconcile both the balances. Let us discuss or some problem. We have to solve some problem for the knowledge of all of you. Because practical, this is theory and everything you should aware. Then practically you should have perfect knowledge how to reconcile both the books. I will start with the first with balance as per cash book one problem. Second, balance as per passbook is the base, another problem. Then overdraft as per cash book is the base, one problem. Overdraft passbook is the base, one problem. So you should have patience to learn everything. First is illustration 1. Illustration 1. So what is given? On 31st March 2024, the cash book of Mr. Kumar showed a bank balance of 57,400. That means balance as per cash book. So we have to do like this. This is particulars. Then if it is balance, plus item. If it is overdraft, it is minus item. We will write this. This is amount. This is amount right. So balance as per cash book is given 57,400. Then on comparing the cash book with the passbook, the following discrepancies were noted. A check of 6,350 deposit bank was not yet collected by the bank. First is check deposited but not collected. Check deposited into bank but not yet credited. But not yet credited by the bank. Here you see, at the time of deposit of check, immediately custom record on the debit side of bank along the cash book. As a result, his cash book balance shows more. As it is not recorded in the passbook, we have to subtract this amount to tally it with the passbook. That is 6350 minus item. Then bank paid our electricity bill, which was not recorded in the cash book. We have given, the customer has given instruction to bank to pay his electricity bill on behalf of him. Bank paid the electricity bill of customer. Electricity bill not recorded of customer but not recorded in cash book, but not yet, means customer is not aware of it, not yet recorded in cash book. When bank paid electricity bill, definitely our passbook balance will show less, it will be reduced, you will debit from the passbook. As a result, the passbook balance shows less, cash book balance shows more, so we have to subtract it. 9700. Then third. What is the third reason of discrepancy? Check issued for a supplier 15,100, not presented payment up to 31st March. Check issued to supplier but not presented for payment in bank. Check issued to supplier but not yet presented for payment into bank. As a result, the cash balance shows less, past balance shows more. The amount is 15,100. So we have to add it to tally it with the cash passbook balance. 15,100 deducted from cash book. As a result, cash book balance is reduced to that extent. Passbook balance it is not entered. So you have to add it to tally it with the passbook. Then IV. Interest on investment 8,800 collected bank, not recorded in cash book. Interest on investment collected by bank, recorded in passbook, not recorded in the bank, not recorded in cash book. So customer is not aware of it, recorded in cash book. What customer will do, when interest on investment collected bank, passbook shows more, means it is credited in the passbook. 8,800 passbook shows more. As a result, we have to add this amount to tally the cash book with the passbook. 8,800 we have added. Then bank charges 650 are debited in the passbook. Bank charges debited in the passbook. You see, when bank charges, the passbook balance should be reduced with 650. Cash book it is more. So we have to reduce it from the cash book balance to tally it with the passbook balance. 650 we have to reduce. Then Mr. Avinash, our debtor, directly deposit 12,000 to bank account on 28th March, which is not entered in cash book. Our customer, direct deposit by our customer, direct deposit by customer into bank, by customer into bank, not recorded in cash book, not recorded in cash book. Then what we will do? We will do it is, that is 12,000, passbook shows more, so you have to add with the cash book to tally with the passbook. Here you see your debit total is more, means other book will also show balance as per passbook. Either plus item will do or will do add less. Plus item, I have done plus and plus minus item. Plus item, minus item. Again I will tell you how to do it. Solve it in other way. Second method is there. So balance is here 300, then 93. 300 means here 0 and then this. $76,600 is the passbook balance. Okay, so answer is passbook balance shows 76,600. This is the case when we show balance as per cash book. If our base here, this is one method, particular plus item minus item. Otherwise we can write straight balance as per cash book 57,400. We will make add all added item. First we write add check issued to supplier but not yet present payment 15,100. Interest on investment collected by bank not recorded in cash book, add it. Then direct deposit by custom bank not recorded in cash book, 3 this will be added, with this we will get 93,300. Then less, in the less we will write check deposit bank but not yet credited bank 6350. Bank paid electricity bills of customer not recorded in cash book 9700. Then bank charges debited in the passbook but not entered in the cash book 650. So these three will subtract, will get the answer 76,600. Then another thing, if this is the best, suppose we have been given in the question balance as per passbook 76,600 and these are the discrepancy, we might have done like this. So base is balance as per passbook, then in the here it is in the minus item, we will write 6350, 9700, 650. So the total will be 93,300. Then we will subtract it, check issued to supplier not yet presented. This. The 3 will subtract, we will get the answer balance as per cash book 57,400. Then illustration 2. Illustration 2. What is given in the question we have to see. Accordingly we have to do. Here it is given passbook. We will solve the problem by taking the base as passbook. So what is given in the second question? On 31st March 2025, bank passbook of Mr. Actas showed a credit balance of 16,700. 16,700. This is the base balance. Prepare bank statement with the following information. Cash of 8,500 drawn from his savings account. Cash drawn from his savings account. First item is given, cash of 8,500 drawn from SB had been shown in the current account in cash book. So here the customer withdraw cash from SB but wrongly posted in current account, posted in his current account, that is bank column of cash book, bank column of cash book. It is wrongly done. So what do you do? Here the cash book balance, when he has withdrawn cash from savings, his savings bank account should be reduced, but he has reduced the passbook, but the balance as per cash book maintained with the current account maintained with the bank. As a result, his cash book balance shows more less, passbook balance shows more. He has to add it. That is 8,500 he will add. Second, check amounting to 27,000 deposit bank or collection, out of which check amount to 23,000 only credited. So check deposited but not credited. Check deposited into bank but not yet credited. How much we have to see? But not yet credited. Here he has deposited the checks totaling 27,000, but checks to the extent of 23 were collected. So 4,000 difference. As a result, his cash book balance shows more 4,000. Passbook balance shows less, so we have to, okay, here we have done the mistake. Because our base is passbook. Here, when this amount we have to deduct from passbook, because your passbook balance is given 16,700, and when the withdraw from savings account wrongly entered in the bank account cash book, as a result cash book shows less, so we have to deduct it from the passbook in order to tally it with the cash book. Deduct from cash book, tally the balance with the passbook. Similarly, check deposit bank or not yet clear 4,000. As a result, the passbook balance shows less, cash book balance shows more. So we have to add 4,000 to the passbook balance in order to tally it with the cash book balance. Then third, check of 40,500 issued on 25th March, of which only check of 1,500 presented payment. Check issued but not presented for payment. Check issued but not presented for payment. How much? The total check issued 40,500, out of only check of 1,500 presented. So 39,000 check not presented. At the time of issuing check, the cash book balance will reduce to the extent of 39,000. So we have to reduce it in the passbook to tally the passbook balance with cash book balance. So 39,000, that is 40,500 minus 1,500. Here you can write also, in the previous we have written, write 27,000 minus 23,000. 27,000 minus 23,000. So over. Then bills receivable of 11,700 which were discounted bank were dishonored on 30th March. Intimation was received on 5th April. So bills receivable dishonored means bank balance will reduce, cash balance is more. See, so you have to add it. Bills receivable discounted with the bank dishonored. Discounted with bank dishonored. At the time of dishonor, the bank will debit the amount from the customer current account. So customer current account will be so less. When current account shows, cash book shows less, bank has to deduct it from his passbook to reconcile the cash book balance with the cash book balance. 11,700. Insurance premium 14,400 paid by bank appear twice in cash book. See, insurance premium entered paid by bank appear twice in cash book, recorded twice in cash book. Cash book means here cash book balance reduced double. It should be reduced 14,400, but it is reduced 28,800. So 28,800 minus 14,400. Cash book balance shows less, 14,400. So we have to deduct it 14,400 to tally it with the passbook balance. Then passbook debit side has overcast 300. Passbook debit side overcast means withdrawal shows more. As a result, the passbook balance reduced. So cash book balance is more. We have to add it. That is 300. We have to add with the passbook to tally it with. Interest allowed bank 800. Interest allowed bank. Passbook will be more. At the time of interest allowed by bank, passbook will show more. Cash book will say less. So we have to deduct it from the cash book in order to tally it with the passbook. Here also, here you see there is an overdraft because the minus side is heavier. We have to total first minus. So minus means $74,400. So it is, we'll write, the other book will also show overdraft. So we'll write overdraft as for cash book. This is how much? 29,330. Here it is 18,700 is the best na. Oh. 36,000 cash. Sorry. The amount was 16,700. Okay. 700 means the answer should be okay. Not. Here we have to calculate. Then 7, 4, then 4. This is 4,000 na. 53,400. So 53,400.